Following a slump in the third quarter, Wall Street is still unable to regain its footing. The benchmark stock indexes are wound down by a number of factors. The underlying reason is that investors cannot tolerate higher interest rates for longer than expected. Fed policymakers are poised to forge ahead with the aggressive monetary tightening. On Monday, all Fed speakers advocated for another rate hike. In this context, the major stock indexes opened October with a mixed dynamic. Wall Street indexes closed mixed on Monday. The Dow Jones slipped by 74 points, or 0.22%. The Nasdaq managed to continue its growth and closed 0.67% up. The S&P 500 is testing support at 4,268 points. Futures on the stock indexes traded in the red in sync and lost from 0.5 to 0.7% in the New York pre-market. Meanwhile, investors are seeking balance between the economic data and remarks of Fed policymakers. The Institute for Supply Management reported yesterday that business activity in the U.S. manufacturing sector declined softer than expected in September. The manufacturing sector has been losing momentum for about a year. Yields of 10-year Treasuries topped 4.7% for the first time since 2007. The US dollar has been picked up steam after Fed policymakers shared the viewpoint in their public comments that another rate hike is in the cards until the year end. The Fed chairman spoke to the point and confirmed the previous rhetoric. He did not drop any hints about softening the Fed stance. Powell said that the regulator is focused entirely on ensuring price stability, and he highlighted that taming inflation is the next way to a healthy economy and a robust labor market. Fed Governor Michelle Bowman was more resolute, saying that she was ready to vote for a rate hike at the next policy meeting if the incoming data indicates a slowdown in inflation. Cleveland Fed President Loretta Mester was on the same page. She admitted that the central bank would have to raise the official funds rate again until the year end. Fed Vice Chairman for Supervision Michael Barr gave more ambiguous remarks, saying the debate is less about the next rate hike and more about how long rates will stay high. The Fed's aggressive stance allowed futures markets to estimate a 50-50 chance of another rate hike of a quarter percentage point to a range of up to 5.75% by the year end. However, already on Tuesday, another Fed representative, Raphael Bostic, slightly softened investors' nerves. On the back of the economy's cooling and inflation easing, Bostic said there is no need for the Federal Reserve to raise interest rates again, but it will likely be a long time before the Fed moves to cut rates. The report on the U.S. vacancies could cheer up sentiment on Wall Street, and the actual data were stronger than expected, and this week investors will have a full picture on the U.S. labor market, including the ADP employment report and the official non-farm payrolls that are due on Friday. Evidently, alongside U.S. Treasuries, the U.S. dollar remains the main beneficiary of the Fed's hawkish statements and the strong U.S. economy. The U.S. dollar index gained 0.17% in the pre-market and opened the New York session at 107.07. Interestingly, despite intraday fall in the euro, the pound sterling and the yen, major currencies were able to reverse before the opening bell and recouped some losses Nevertheless, the long-term outlook for the US dollar remains firmly bullish. The greenback owes its strength to a couple of powerful catalysts: the Hawkish Federal Reserve and stronger than expected US economic data. The Canadian dollar was badly bruised on a Monday by a fall in oil prices, and the loonie is getting weaker today, so the USD CAD pace are trading firmly higher, and the next upward target for the buyers is 1.3778. As for the crypto market, the rapid rally stalled yesterday and popular crypto assets pulled back from their highs. Bitcoin found support at $27,500, 1% down from yesterday. Optimistic news released on Monday could not prop up the rally, and still the crypto market managed to retain some gains. Speaking about the intraday outlook for Bitcoin, the token could spend the decision sideways in the range of 27,450 to 27,650. If the crypto fails to settle at 27,550, it will decline to $27,200, and the alternative scenario suggests an attempt to recover to 28,000. We hope that our video will clear up market developments. Feel free to leave your comments and ask any questions. Make profits with the InstaForex, and see you online tomorrow.